Hello, welcome everybody. Last night we did a video about the Trump tweet trashed the market. Let's take a look at what we have going on in our live trading room. You can see that currently we're long, been long, had a couple great trades, did some good stuff over here in, let's just do a quick review. You can see in the euro currency we had a nice little up trade. I'm not sure the dollar is going to completely crash, but we warned you that we could see maybe perhaps this market moving higher in the euro currency over the next couple days. What I'd really like to see is, again, as I pointed out, daily pivots above weekly pivot and prices trading higher. And that's the number one sequence that we try to look for. As it is with the E-mini S&Ps, we had a couple goes at it this morning, a really nice long position, got scalped a little bit in this lunch hour here, and we got right back on the horse in at 19. You can see where we took half the profit and we're still long one from 29.19. This thing has just been, you guys have seen this that I've been posting in the live trading room. You get access to this, and for those on the YouTube, you've been watching us do these videos. So the Algo 17 has really been instrumental. But what I'd literally, besides just right now, this 29.19, and we're up to 29.35 and a quarter, we're up 812.50, 25. That's a one lot because remember, it scaled out of half the position. What I want to get into is this right here, because currently in our live trading room, a couple things that we did today, we jumped on Labu. That's the 3-time ETF on the biotechnology. So Labu is breaking out because biotech's breaking out. We'll get to that in just a minute. We have a position that we bought in last week on Experian Pharmaceuticals. Yesterday it was on the video that I posted for you guys. I also went through about Hess. I talked about Coty, Kohu, all kinds of stocks that I thought, AZZ, that I thought would get a lift today, possibly, and what to follow. So here's the story. Experian got FDA approval, or a drug was passed. It gapped higher. Here's how we traded it. First and foremost, we liquidated half the position, and we just trailed a stop. It's as simple as that. I like the fact that we had exposure to the biotech. What led us to this trade was simply this, the combination of improved relative strength, and I'll just point out exactly what it was. Improved relative strength. This is the what's called person market catcher. You can see it right here. It's a relative strength indicator. Again, it's not I didn't invent relative strength. I've just modernized an indicator to give me a look-see into 4 different stages of a market: improvement, outperformance, weakening, lagging. So those are the 4 colors you can see. There's dark red, there's fuchsia, there's bright blue, and then there's dark blue. You can see. So if a stock is doing better, it's improving, it's fuchsia. When it's outperforming, it's bright blue. When it weakens against the overall market, it turns dark blue. And when it lags, like get short or get out of your longs, it's dark red. So that's the person market catcher. We had a good sequence, and again, it's not like a major home run on Experian. We're up 10% on this trade. Where our target was 50, and in the pre-market session today, it traded up over 51. So, maybe that's someone was selling up against the pivot resistance up there, that 50.5. The moving average crossovers up here. That just seems to be kind of a strong shelf of resistance. But boy, oh boy, it's got really decent volume. So let's take a quick gander at the rest of the world. First off, I think we are starting to see the breakout, the real deal McCoy out of the Russell. And so with that said, for J-Person Asset Management, our managed accounts that we've been selectively trading, you will see in your accounts, if you're one of those clients, you'll see you do have a position on NTNA. It's the leveraged ETF on the Russell. This needed several things to happen. It needed to see the biotech catch up. We've got the regional banks, and then energy. We wanted to look at maybe the XOP relative to the oil service sector. Now, I don't mean to get too alphabetical with you In other words, descriptive on select subsectors of the market. But energy has two distinct separate areas: oil and gas exploration, XOP, and the refiners, and then oil service sector, OIH, with like Schlumberger, Rig, and Halliburton. I don't want to be a part of the OIH. I want to be maybe focused on XOP, oil and gas exploration, and some of the refiners. In yesterday's presentation that you may have caught on YouTube, and by the way, if you like what you see, give it a thumbs up. If it doesn't make sense, you know, some people just want to put a thumbs down. What for? I don't know. If you want something better, then put a comment in, and we'll try to improve what you're looking for. And that's what it is. I'm doing these to share with you my work and also to get you into understanding what's making these markets tick and how we're doing it live in our trading community each and every day. So hopefully you benefit from that. We shared with you our scanners, and by the way, I'll just share with you one more time a couple stocks that we put out for our members. One was GW Pharmaceuticals, and then today, I mean, right out of the box, GW. Now this is a medical mirror, or let's call it a pot connection company. All right, that's the pot company. So high closed dojis, we had some other ones that we were looking at. You may recall we posted out, if I can get down here into the technology, I know we had AZZ, Kohu was one that we put out. Kohu's got some upside potential, and it's significant. I mean, look where it's come from. Friday, it generated a nice little PPS buy signal. The volume looks good, and the relative strength starting to improve. Also in this space, in technology, Cirrus is really breaking out. It's got a little bit more potential if it really wants to carry on to the upside. But in this case, also CDW. I mean, this is a high-risk trade, I think, in my opinion, only from the very nature of you're buying a breakout, but it still helps support the sector in the computer hardware space. So with that said, yesterday's video, we gave a bunch of things that I thought were pertinent to if the market was going to recover today and launch off of those lows that we saw together live last night. These were stocks that would get that benefit from that, and those sectors. So this is microchip, the entire semi. People are asking me today, well, what do you see in the semis? And quite frankly, we didn't get a strong concentration of buy setups in, as you can see here in the technology. You don't see a lot of semiconductor. You just had microchip, one name. It wasn't a big part of what generated new, fresh weekly buy signals. So I think we're going to have to, today, at the end of the day, if we manage to maintain, I mean, we're at 29.37 and a quarter still. Let's go review the current trade. We're still, there it is, 29.37 and a quarter. I mean, we're just barely off the highs of the year in this market. That's a pretty impressive rebound. So the point is, if we are going to see continuation of the upside, is now the time, is this setback that we had, is now the time that we could maybe sink our teeth into the Russell? And should you have a lot of exposure to TNA? And the answer to that is, I think the secret is looking at biotech, IBB. So IBB is up. Here it is. Let's look at the biotech. As I've already given a full disclosure, we were in Esperion Therapeutics. We liquidated half the position and raised our stop. So we do have still exposure to some of the biotech in that regards. But the biotech space itself, I think if you look at, overlay a chart on biotech, and here's the IBB, and then you take a look at, if I can bring this into speed, here's the biotech sector, IBB. And here was the October where it started from way up there, 121. Now let's look at IWM, the Russell, the small cap growth. I mean, it's not exactly the same chart, but you can see that distinctly the similarity is they're well off their October highs. So the secret, I believe, that we needed to get participation out of biotech. We had participation in regional banks. if we can get a little bit of energy to participate in this move or recovery, this Trump bump right now, or the China trade diffuser, let's call it, then this could be a 3-4 day rally in the Russell, and you'd want exposure. Ways to play it: if it is a pure Labu or biotech play, go with Labu. May 17th expiration. You could go 11 days, 55 strike calls on Labu. Double check, LABU. So if you are going to get a breakout, where it's sitting here right now at almost 53. In 11 days, I mean, look where we came from, 66. So a 55 strike call was going for about $1.70 earlier today. Now they're around 210. You get a close and a breakout. Maybe this video didn't reach your ears fast enough, but this is what we put out in our live trading room. Another trade we put out for those that wanted a little bit longer was the June 21st expiration, 46 days, and those were the 60 strike calls. Now, I'm not a big fan of doing a calendar in this situation, because if this is a directional breakout, then you want to be just net long, and that's Labu. Labu has an effect of what? The biotech. It's a leveraged ETF. It also will play an important role on lifting maybe perhaps the small cap sector. So let's double check something real quick. Let me go up with you and let's take a gander here at the drug sector on my radar screen, if I may. Here it is. Healthcare. You know, I'll go up and down the gamut with you, but if you focus up here, here's healthcare, United Healthcare, hospitals, Tenet Healthcare got a big lift today, and look at the drug companies, AbbVie, exposure to pot there, which is an offshoot of Abbott Labs, and then Johnson & Johnson, look at this company. I mean, how can you, I mean, right off the top, here's a company that is getting sued with the cancer and the baby powder whole thing. And boy, it's up near its, like what, 6 months highs at least. So here's the biotech space. Look at these percent changes. Biogen, that's a big number, 2%. Regeneron, 2%. Bluebird Bio, up 2%. Those are some good names. These are just the top stocks that I follow, that I watch. And all of them are starting to see new, fresh, this blinking stuff. Means it's changed from sell signals to buy signals. Lots of concentration in new, fresh buy signals in the biotech. Relative to utilities, which is all still selling off, department stores, Nordstrom, TJ Maxx. TJ Maxx opened sharply lower. You know, I told TJ Maxx and Best Buy, two stocks that I like to the upside in the retail consumer discretionary sector. Why? TJ Maxx still, I think people have bargain hunting capabilities in, and then Best Buy, because, well, Father's Day in June's coming up, and also the with graduations, etc., Best Buy electronics store still looks pretty healthy to me. Looking at today, ironically, anything attached to China still kind of negative. Starbucks, big exposure there. Baba, Baidu. We also put out a short recommendation on Nike. To me, I just got to tell you, this has got nothing to do with the market. This is just rotation. I don't like a stock that has a definitive bearish divergence with decay and volume momentum. That's what that shows. And then Nike definitely did not recover like a lot of these other stocks are recovering today. And then finally, let's get into what we really would like to see to get the cream on the icing, so to speak, or to put the icing on the cake, is besides the financials, I want to see these regional banks. I want to see more of the regional banks participate in this rally. We have we scaled into a half position. We didn't get filled on the entire position. We scaled into BB&T. I like BB&T. It looks like, you know, if you note the trade that we see here, it is not broken out. Don't get me wrong, not a major breakout. What do I mean by that? From the highs back here, September, October, check it out. Here is it's not breaking out. If we can get some follow through on this thing, this is going to be amazing reversal of fortune in the regional banks, and that's going to also help lift the Russell up. But here's where the real story is. You can see the breakdown between The oil service sector, OIH, still negative with Schlumberger, Halliburton, and then look at the oil and gas exploration. So it's not just the deal with Anadarko Petroleum. Today, Occidental is going to generate a fresh new PPS buy signal, and that might be good for a lift off back to close to, like, say 61 initially, 62, something like that. It's a little overdone to the downside. Today, crude oil up 62.85 right now. In other words, it's up 1.5%. So this should be helpful and supportive to some of these refiners. PSXP, the ones that we took advantage of earlier was Hess. I'm still stalking it. I didn't buy it today. But look, take Anadarko off the table because of its buyout. And Chevron, Apache, Marathon, Devon, Pioneer Natural. Pioneer Natural, this is one that also is coming right into support. So if we can get follow through upside this week in the energy, you definitely want to watch and have exposure to TNA or the Russell. This could be the real deal for the Russell. Everyone's been wondering when it's going to finally catch up. Well, the secret is if energy, regional banks, and more importantly, those biotechs take off, that's where you make your money on the long side. So I already gave you some option trades that you could look at. Near term, if we do get this breakout, if this was a dump before a major pump, which I can't understand, why would the president put out a tweet like that? Listen, mine isn't to question why. Mine is only to trade and make sure that I don't lose my shirt in this business. But the point is that I think we have our finger on the pulse. You can see that by the videos that we've been putting out. The indicators that we have are working dynamically. And so what I would tell you is this. Making money in the market is not that easy. Think about all the people that got bearish this morning. Ow. And I think it's not important how a market opens, it's how a market closes. And with that said, this is going to be a strong close, and we do have a lift-off now in the S&Ps. We have a lift-off now in the biotech, and we have recovery here coming in the Russell small cap sector. So with that said, look forward to updating you again as I promised I would. Take care, and again, if you like what you see, thumbs up. If there's something that you'd like changed, write a comment. Putting a thumbs down, don't come back. It's real simple. I don't need it. You don't need it. But if you want something better, then let me know. Put a comment in. Thanks, everybody. Take care.